All right, well, let's go ahead and get going. A lot of stuff has changed, obviously, in our country in the last couple of weeks, and I thought that a webinar to discuss the laws that have been passed, including the one that was signed Friday, would be beneficial to clients and colleagues. So I'm happy to do this. I spent the weekend reading, which I spent most of last week reading, and then this weekend we finally got a final bill. So at least we got things concrete, and that was a really positive thing. The provisions that were enacted Friday are historic. I've been in private practice as an accountant and attorney for 30 plus years, and I've never seen anything like it. And so it is a tremendous program. We'll get to that in a little bit, but I wanted to catch everybody up on IRS issues in general, and then we'll go into some of the programs available for small business people. So the first thing is that the IRS has issued a notice stating that if you have an installment agreement, and I know some folks have installment agreements because they owe money from the past and they're just working with the government to pay it off, and that's not a problem. But if you have an installment agreement that's in place, that has been suspended for April, May, June, up to July 15th. Okay, so the months of April, May, and June, you do not need to make a payment on the installment agreement, and you will not consider to be in default. July is a little bit interesting because the cutoff date was July 15th. So if you have a payment due before July 15th in the month of July, it's suspended. If it's after July 15th in the month of July, it's not suspended. So make that July payment depending upon your due date for your installment agreement in July, according to whether it's before the 15th or not. So those that are in an installment plan, there's some relief there. The IRS has indicated that they are not going to start any new audits during this period. However, audits that are ongoing will continue just without face-to-face meetings. On the collection side, no new liens and levies are going to be started by the IRS during this period unless it's an emergency. They feel like there's no way they're going to get paid or there's a statute of limitations issue, but otherwise they are not going to commence new liens or levies. Same with audits, no new audits for the time being. And then if you have a case that's in appeals, that case is also not suspended and moving forward. So you have to follow all your deadlines. And we had a couple of deadlines for clients last week that we had to meet on the appeal side, even though we're working from home. Welcome to my basement, by the way. So that's what's going on with the IRS with respect to their operational matters. And so hopefully the number of notices people get and everything else will calm down a little bit during this period, because it's just a lot of stuff for people to be worried about. The tax returns. So if you have a return that is due April 15th, that return is postponed until July 15th, okay? You don't need to file an extension to get from April to July. It's automatic if you want it. Now, that includes payments that are due for the 2019 year. So you can make a payment July 15th and there'll be no penalty or interest on that penalty for it being late, okay? Now, the first quarter 2020 estimates are also suspended, right? You don't have to make them until July 15th, okay? But your second quarter payment due June 15th has not been extended. So you have to make your second quarter payment June 15th, and then the first quarter payment would be due July 15th. So that's just one of the caveats of what they've set up at this point in time. So I encourage you to, if you have your tax stuff ready, get it done. Our office is working. If you've got another tax preparer, they probably would appreciate the work right now. We only had 5 tax returns come in last week in our office, and this time of year, that's unbelievable. But we know we'll get it all done eventually, and you can file an extension July 15th for October 15th. Now, there's one caveat to that. If you have a foreign bank account that you're required to report on a FinCEN form that's normally sent in with your tax return, that return should be extended as of April 15th, because there is no relief for that form. So we have several clients that have foreign bank accounts passed down by relatives and things like that. Those people will have to file an extension April 15th to extend the FinCEN form, because they just have separate deadlines within that world, and we don't get any relief on the FinCEN form. The extension does not apply to any tax return other than one with a 4/15 due date, and it does not apply to trusts or estates. So if that helps you plan, then that is what it is. But if you file an extension in July, know that it only takes you to October. It doesn't give you 6 months. Usually your extension filed in April gives you 6 months until October. The July extension only gives you till October. The filing season is going to come to an end at this point, October 15th. Okay. So that's where we're at with filing benefits. I'm going to skip ahead and then we'll come back. But with respect to the monies that people may get back from the government, I know there's been a lot of questions about this, and so we'll jump right in real quick because it's not that complicated. A single person is going to get $1,200. A married filing joint is going to get $2,400. You're eligible for $500 for each child under the age of 17 as well. These monies are phased out to the extent that you made more than $75,000 as an individual or $150,000 married filing joint. So it becomes phased out at $150, and I think it's $5 per thousand that you lose until it eventually just goes away. So $2,400. If you filed on your 2019 return, if you filed your 2019 return, that's what they're going to base it on. If you haven't, they're going to look back to 2018. Now, if you've had refunds direct deposited into a bank account before, or if you've authorized the IRS to pay money, to pay taxes out of your account on your tax return before, this money may come back to you in direct deposit format. Okay. I am not aware of a procedure right now to give them your direct deposit information to speed up receipt of this money. If they do not have your direct deposit information, either from a refund or from a payment on your 1040, then they are going to cut you a check. There will also be a confirmation letter that goes out after the funds have been sent to confirm the amount that you received. The money you receive, if you receive it, is not taxable income. Okay, so you don't have to pay tax on these monies, and that's how they're going to handle that. Let's see. So that kind of covers that emergency payment that they're going to be making. And sorry to refer back to my notes. I know it's distracting, but there really is a lot of content, and I want to make sure I don't get anything wrong. Okay, so now we're going to move on to the small business requirements. And so the bill that was passed Friday is known as Phase 3 of coronavirus relief. There was a Phase 2 that was passed that affected small business. We're going to talk about that here for a few minutes. Phase 1, I don't know what it is. They had a bill named Phase 1, and it must have pertained to government or something, because I can't find it anywhere. So we're on Phase 3, and I don't know what happened to Phase 1, but it is what it is. Phase 2 is important because they put some paid leave benefits on smaller employers that had not existed before. We want to, Ken, you asked a question if the 75 and 150,000 is AGI for the limits on the money you're getting from the IRS. Yes, it's AGI limits, not taxable income limits. Just in case everybody wants to know that. You can send me if you send a chat to me with a question, I can respond and I'll read it back to the group, because maybe somebody else has got the same question and make it more efficient. So the Phase 2 coronavirus relief imposed paid leave restrictions on employers, small employers. So if you have less than 500 employees, this bill directly pertained to you, and you're now required to have paid leave provisions for employees that are sick, told by a healthcare provider to quarantine, along those lines. Now, for a full-time employee, it's pretty easy. It's 80 hours for 2 weeks. So you have to pay 2 weeks of paid sick leave for this person. The benefits are capped at $511 per day if that person is sick. If the person is caring for somebody else, then the benefit is capped at $200 per day. Okay? Now, if you are an employer with less than 50 employees, you have the ability to apply for a good cause exemption from this provision. I have no idea what that looks like. They have released nothing that tells us what the process to do that is. So at this point, we're telling people related to coronavirus, if you have an employee that's sick or has been told by a medical professional that they need to quarantine, that person is eligible for up to 10 days of sick leave. $511 a day is the maximum. All right. These funds for the leave are not subject to employee FICA tax. The employer FICA tax that you pay is going to be eligible to be paid back to you in the form of a credit on your payroll tax returns. Okay. We've not seen new 941s that tell us how to claim the credit or anything else, but they're telling us that if you've paid a paid leave benefit, you are going to get a payroll tax credit for the amount that you paid. And it relates to the employer side of the employment taxes. It's a little bit confusing, but there's been no process laid out. All right, so the tax credit you're eligible for is 100%. You're still supposed to do the employer side FICA benefit, but you do get a credit for it against your payroll taxes on a subsequent 941 to be filed. So we've got first quarter coming to an end, March 31st, 941s are going to be due. If there's a sick leave that's in that period, there should be a way to claim it. But we'll have to keep posted to see if the 941 form gives us a line, or if there's some notice from the IRS that tells us how we're supposed to calculate it. If you have a part-time employee they are also eligible for the paid sick leave, okay? The part-time is an average of 2 weeks of hours. So if they work 20 hours on average, they're eligible for 40 hours of sick time over a 2-week period. Their benefit, again, is capped at $200 a day. So you have to pay it for part-timers. That's based on the average hours that they work. So full-timers and part-timers both get a benefit, and it's limited to 2 weeks, but it's a cash flow burden on small businesses, but it's the law. There was a provision came out over the weekend that said they're going to delay enforcement of this for 30 days so employers can get their hands around it and understand how to do it. If you have anything like this, folks, keep records. Make an Excel spreadsheet, keep some notes, do something that will allow you to keep track of how much you're doing with this sick leave, because you'll see as we go on, there's more employment tax benefits coming, and we've got to track this stuff, because if you don't track it, it's going to get lost in the mess, and who knows how hard it's going to be to recreate records. Okay. So I'm just going to tell you right now, let's do records from the beginning. The first thing you do when you start off is let's do records. I got a separate spreadsheet. I know where it is. This is how it's going. And this is who's responsible for keeping it. Phase 2 of the coronavirus relief also extended the Family Medical Leave Act to businesses with less than 500 employees. So the Family Medical Leave Act is the act that gives people up to 12 weeks of leave and kind of guarantees their position when they come back. There's some caveats to it, and that's a simplification. So I'm not meaning to scare anybody by that, but it's a pretty onerous provision, but small businesses were exempted from it. Now we're not, as it relates to the coronavirus. So if you have an employee that has to take care of somebody or has to stay home with a child because childcare is closed, they are potentially eligible for this FMLA relief under the coronavirus provisions. Now, it covers 12 weeks of leave. The first 2 weeks are unpaid under this act, right? It can be paid under something else. They could use vacation time. If they have the disease, they can use sick time during those first 2 weeks. But they get no benefit under the Family Medical Leave Act those first 2 weeks. The next 10 weeks, the benefit is capped at $200 per day, and the total benefit is $10,000 to any individual, okay? It's a lot of money, I know, but it's the law. We got to follow it. All right. So the sick pay leave is not subject to the employee FICA tax. So you don't have to collect or remit employee side FICA taxes. The 12.4%, 6.2 is the employer, 6.2 is the employee. You don't have to collect or account for the 6.2 on the FMLA leave money paid. Keep records of what's going on calendar per employee, what you paid them, what, and what benefit they were under. The credit is not yet defined. There's supposed to be a credit back to the employer again on payroll taxes. It has not yet been defined, and so most of the practitioners are thinking that it's going to be better for us to take other benefits, but we don't have a choice, right? If it's the FMLA. Now, again, if you have 50 employees or less, there is a good cause exemption you can apply for this. There's a question, if an employee is in self-quarantine, is that considered sick time? The way that the law was written is that they have to be told by a medical professional that they have to self-quarantine. So if you traveled for spring break and somebody's self-quarantined like I am, I don't think that's eligible for sick leave. I wasn't told by a medical professional. I'm just trying to follow the guidelines and do my part. And so the way the law is written right now, self-quarantine without some sort of symptoms, medical instruction is not covered by the sick leave. Okay, so that's the FEMA, the FMLA law. So we have two provisions in phase 2. We have the sick leave and we have the Family Medical Leave Act that now apply to small businesses and their employees. All right. Now we're going to jump into phase 3. So phase 3 had 3 different bills drafted last week. So I've read this numerous times. We thought we were going to have a bill last Sunday. I read that one. We thought we were going to have a bill on Wednesday. Read that one. Thursday morning, we read another one. So we've had a lot of changes and we're trying to keep up with all of them, but this is what's going on. So the most important provision under the phase 3 coronavirus stuff that was submitted Friday is what is called the Payroll Protection Program. Now, this is a loan program, but it's called Payroll Protection Program, and it's going to be pretty obvious why as we go through what these requirements are, okay? Now, this is a provision that, again, I have never seen anything like this from the government. And I encourage everybody to apply for this money. I don't want to say it's a windfall, but it is a generous provision and it will help. Okay, so I'm most of you know me. I'm not normally a guy that jumps into taking government assistance or government aid. This is a program that I am going to apply for, and you should too. So let's go through the mechanics of it. It's a little bit complicated. It's not as straightforward as social media would have you think, okay? So it's a forgivable loan to a portion of it, right? It's how you spend the money makes it forgivable. How and when you spend the money makes it forgivable. The covered dates are from February 15 of 2020 to June 30th of 2020. So that's the period that they're looking at, all right? Self-employed and independent contractors are eligible for this, but we don't know how they're going to calculate the eligibility. And you'll find out why, because your eligibility is based on payroll. So what you have to do is you have to look back for the last year. So from March of last year to March of this year, you have to look back at your payroll. And payroll includes salary, wages, commissions, tips, paid leave, healthcare payments, retirement benefit payments, and some payments to independent contractors. That has not been defined yet, okay? You have to look at all those costs on a monthly basis. You have to calculate your average payroll per month based upon that measuring criteria. That average monthly payroll amount times 2.5 tells you how much money you can borrow. So quick example, if your payroll costs are $20,000 a month, you can borrow $50,000 under this program. That's it. That's the cap. The cap is $10 million or 2.5 times your average payroll cost. Okay? So if you don't have a very big payroll run, this program's benefits are going to be limited to you, but that doesn't mean you shouldn't still apply for it. Okay? So average payroll costs. Get your accounting done now, right? Again, Senator Mnuchin was on the Talking Head shows yesterday, Sunday morning, talking about this program. They are working with the SBA. They are going to have details released by Friday. The details are supposed to mean you can go to your bank, get the loan. The bank will give you the loan right away. SBA guarantees it. Okay? They are trying to speed this process up. They want to get monies in people's hands, but if you need any sort of records whatsoever, you've got to get them caught up this week. So get on your accountants, get them caught up. Close last year, finish the books, leave it open so tax people can make their adjusting journal entries, but get them done. If you haven't got them done, get them done. All right? Now, when you calculate your payroll costs, salary paid to an individual over $100,000 is excluded. So you're capped at $100,000 of salary per employee in calculating this cost, which that can be a pain in the hiney to go back and back it out, but you've got to do it. So again, create a spreadsheet and preserve it to show your calculations, okay? Again, average monthly payroll times 2.5 is the amount that you are eligible to borrow, no more than $10 million. Now, the forgivable part comes in when you're talking about allowable uses, okay? This is not required by the law, but me talking to you, my friends, my clients, I'm recommending this. If you take this loan money, get a separate bank account in the business name, put the money in that account, and then pay certain expenses out of that account. It's going to save you a lot of headache down the road if you ever get challenged or anything comes up that somebody's saying that wasn't forgivable. Put it in an account, spend it out of the account. The account may only be open a couple of months. I don't care. It's going to make your life so much easier. All right? Get a separate bank account. The allowable uses for the money in order for it to be forgivable. Payroll, including healthcare, health insurance, that sort of thing. Payroll, rent, mortgage interest, and utilities. Okay? Those funds are what are going to be forgivable. Ken has a question. Oh, let's see. Does bonus count towards that? Alfie, we think bonus counts towards the payroll cost. However, if it takes somebody over $100,000 account for the year, it will not. And then, does this include contributions to the simple IRA plans? Yes, if an employer is matching the employee's contributions to a retirement plan, those costs are payroll costs. All right, just the employer's match is the payroll cost. And the owner's payroll is covered. Yes, so you're in this calculation. I'm in the calculation for my office. I'm an employee of my company. I'm in the calculation. It's capped. Yep, payroll's covered but capped at $100,000 for the owner. There's no caveat to that. Okay. Now, this loan is really unique because there's no requirement that you've been turned down or denied for other lending. Okay? None. There's no personal guarantee. And if you use the money in those categories we just discussed, it's a non-recourse loan. They can't go beyond the company. And then this is another caveat that's going to help a lot of business owners. There's no collateral requirement. I mean, this is meant to be a cash loan, boom, out the door. So again, please take advantage of this. And as we get more information, it's supposed to be out by the end of the week. And it's a huge program. They allocated $370 billion for this program. I mean, I can't even count that high, right? That's a lot of money. All right. Now, we've already talked about the code does not require a separate bank account. The code does not require a separate bank account, but I'm suggesting that if you take this loan money, you get a separate bank account for it. Okay. Yeah, Alfie, we believe that you're going to be applying for the loan directly to the bank, but that hasn't been released yet. We won't know up till Friday what the procedures are to apply for this. So I don't know, but the word we have is that the SBA is working with banks to try to get them to do the loans, and the SBA is going to guarantee it, but we don't have the details on that yet. So we'll have to be patient for another week, but this is a chance to get all your records in order to apply for a loan. And I don't even know how much paperwork is going to be required. I would imagine you're going to have to be able to demonstrate what your payroll is. So you have to have your books done up till March. That'd be my guess. So use this week until we know the actual procedures to get ready to get this loan and get the money in your hands as quick as possible. Okay. Okay. So again, we're calculating average payroll costs for the last 12 months. Times 2.5 is the amount you can borrow. If you spend that money on payroll, healthcare, rent, utilities, mortgage interest related to a building, those monies are forgivable. You do not ever have to pay that money back. And that's why this program is so unique. It's not taxable income to you. This is really a windfall in that respect. Usually if you have income, money's paid to you from a loan and they're canceled or forgiven, you have income to that extent. We do not have that situation right now, okay? I've got some questions, but I'm going to hold off right now because I want to get through this and make sure everybody understands what we're doing. So, the only thing you need to do when you take this loan is you have to do a good faith certification at the conclusion of the process that says that due to the current uncertainty, the loan is necessary. Well, I'm certain that none of you have a problem signing that statement truthfully, right? I mean, you know, President Trump extended the stop the curve process until April 30th now, and you know, hopefully the worst of this will be behind us in a week or two, and then maybe we can try to get back to some sort of semblance of normalcy. But you have to sign that good faith certification. Now, there's going to be a process also that comes out where you have to apply for forgiveness. So you're gonna have to demonstrate that you spent the money in a way that makes you eligible for forgiveness. That's why I'm recommending a separate bank account for the company that gets the loan proceeds. Put the loan proceeds in it, spend the forgivable stuff out of that account, and then if there's money left over that you have to spend for other purposes, that's fine. Simply know you're gonna have to repay those monies, but you don't have to repay the forgivable part, and then you've got a nice little bank statement and an account that shows the money that went out of that account for those enumerated expenses. I think it makes sense to do that. The banks may not like setting up an account for a short period of time, but that's what banks do. So I think it's going to make your lives easier. Okay, so the following costs are forgivable. So let's go back to our example. If I've got $20,000 a month in payroll, I can borrow 2.5 times that. So that means I can borrow $50,000. If in the next 2 months, so the forgivable part is spent over the next 8 weeks after you receive your money, 8 weeks. That's the only forgivable part that we see right now. Over the next 8 weeks, if I cover my payroll, and let's say that's $20,000 a month, so I do 2 months of payroll and 2 months of rent at $4,000 a month, that's $48,000. I spend another $1,000 on utilities. I borrowed 50, I spent 49 on forgivable expenses. I have to repay $1,000. Okay? But all that stuff on payroll, rent, utilities, forgivable. Now, it gets a little more complicated if you've had to lay off staff or you have employee headcount reductions. If you have an employee headcount reduction, it will penalize your forgiveness. It will reduce your forgiveness proportionally, and it's a complicated formula, but they will reduce the amount of forgiveness you can receive. Okay? Likewise, if you cut people's pay, even though they're still working, but you cut their pay, and these are people that aren't above 100,000, right? It doesn't make a difference if they're over the 100. It's the people that are 100 and below. If you cut their pay, you're also going to have your forgiveness reduced. Okay? So just, I know some of you are really good with paperwork. I know some of you aren't. I'm just encouraging you right out of the gate, please do paperwork. Keep meticulous, detailed records. And if this isn't your thing, get an employee to do it for you and trust them and make it their job and look at them. Because I would hate for you to get the loan, spend the money, and then not be forgiven for eligible expenses because your records don't support it. And I don't know what kind of audit they're going to do when you apply for the loan forgiveness. I don't know what that process looks like. I won't know till the end of the week, but it calls right now for there to be an application for forgiveness. So let's just get ready for it and prepare the records that we need. Okay? Now, if you recall an employee within 30 days, there won't be a penalty for that. So if you've let somebody go and then this program comes in and you decide to bring them back, there won't be a penalty for that if you brought them back within 30 days. But again, and I'm kicking a dead horse, I know it, but this is not repayable if you use it for the agreed upon categories, and it is not taxable income to you. Okay? I mean, it's just cash with no, with a few strings attached, but I mean, the government's not in one hand and out the other. I mean, they're giving it to you. And if you use it the way they want you to use it, it's yours. Okay. Let me see what questions we have relating to that stuff before we move on. We've got a number of questions. Let me. Okay. Good. So yeah, on the how do we apply, we do not know yet. Again, the SBA is supposed to be working with banks and working on procedures, and that is expected by Friday of this week, according to the Treasury Secretary. We've already laid off somebody. Yes, so your eligibility requirements for this loan, there are none. You have to be in business. You still have an average payroll cost. The question was, I've already had to lay off a personal assistant due to stay-at-home requirements and then her responsibilities at home. Do I still qualify? Yes. If you've had to let people go, that doesn't mean you're not eligible for the loan. It's just going to affect how much of it is forgiven. And so you're still eligible. I mean, there is no eligibility requirement for this loan. You don't have to have been denied credit or anything else. It's simply, you're a business owner and you're certifying that these uncertain times require you to borrow money. And then to the extent you use them for those forgivable purposes, then you're able to not pay that money back and not have income. What about a 1 or 2 week furlough? That won't affect this calculation because they're going to be called back within 30 days. So it shouldn't penalize you on the loan forgiveness for that furlough. Let's see. When calculating the average payroll, do we count the employer's payroll, the employee's payroll tax? Sorry, my mouse is working funny. I don't, the text of the law does not tell us if payroll taxes are included as a payroll cost. And the employer side, I think it should be. The employee side obviously is just a reduction of the wages you're paying the employee, so they're covered in the gross wage number, so that'd be double counting. But I haven't seen anything directly that says employer payroll costs are included. But my hunch is that it will be. I just don't think it's been enumerated yet. I didn't see it in the text of the law, but it would surprise me if it's not included. But I'll have to follow up on that. If an employee is on commission and compensation goes down to the lack of commission, will that be a negative impact of forgiveness? I don't think that commission, I think they're looking at base salary being reduced. I think commissions, you can't cover commissions for sales that aren't there. So I don't think that would affect forgiveness. I may be surprised when they come out with guidance, but that's my take on that. So the best information I have right now is I don't see how a reduction in commission that's variable could affect forgiveness, except that the good side is that, you know, if you had a higher commission last year, that increases your monthly payroll costs and gives you more to borrow. Do we calculate the average payroll from March 2019 to March 2020? They have not given us specific guidance on that. I'm just looking at a 12-month look back period. And so that's the period I'm assuming they're going to require. If you don't borrow money till April, which at this point is obvious, they may need all of March records. I just don't know until Friday, but I get your accounting caught up to date. I mean, I told my office staff, we don't have as many tax returns in the office to do right now. I'm like, I need my accounting records caught up because I want to be ready to go on Friday. So take advantage of the time. The money that is forgivable has to be spent in that 8 weeks. The money that is not forgivable is not, doesn't have that 8 week requirement. But right now, it's right now it is to be spent in an 8 week period. Somebody asked a question if you can boost payroll to try to drive the average up, and you absolutely can, but if you over $100,000, it doesn't matter because that's excluded. So you can give somebody extra compensation to try to drive up a 12-month average. I think it would have to, I don't know how that would have a meaningful effect, but 2.5 times even $1,000 is $2,500. So there's a multiple there. So that would be effective, but if it's over 100, if that person's over $100,000, it doesn't make a difference. Let's see. And that looks like all the questions on that. So that's the forgivable loan program. Average monthly payroll times 2.5 determines your eligibility. No collateral, no personal guarantee, no recourse debt for the monies spent on the qualifying categories, which are payroll, healthcare, mortgage interest, rent, and utilities. That's forgiven. It is not taxable income. Now, if you have monies that are not forgivable, all right, after you've done the application for, you apply for the forgiveness, you receive the forgiveness, the monies that are available after that or left after that, those are subject to a maximum interest rate of 4% and a maximum term of 10 years. So you still have a 10-year window to repay those money, and it's 4% interest rate. So that's still pretty favorable borrowing. So I would look very much at doing the program. That is the forgivable interest program. So now, this is obviously favoring somebody with payroll, and that's just the way the program's set up, right? It's a loan program called the Payroll Protection Program. So there are other borrowing tools available. So that's the forgivable loan program under phase 3. The SBA, so an additional borrowing program through the SBA. This one was in existence already, but because the entire country has been declared a disaster area, everybody is available or eligible to file for an economic injury loan with the SBA. It's an economic injury disaster loan. Now, the SBA can lend up to $2 million. The interest rate is 3.75%, and the repayment terms are up to 30 years. That doesn't mean you're going to get it, but they can conceivably do a 30-year loan on this, okay? So up to $2 million, no payroll calculation to determine how much you're eligible for. Up to $2 million, 3.75%, up to 30 years of repayment. That's like a home mortgage amortization schedule, okay? Now, this loan is really unique, again, because once you apply for it, within 3 days of that application, you can request a $10,000 emergency grant or an advance. Even if you don't take the loan later, you don't have to pay the $10,000 back. However, if you also apply for the Payroll Protection Program, the $10,000 will come out on the forgiveness side, and you won't forgive that $10,000. You will repay it. All right? So the advance is not repaid if you don't take the loan out. So you do the application process. Within 3 days, you can get an advance of $10,000. Okay? But it reduces the forgiveness. So you've got 2 borrowing programs, the Payroll Protection Program, and you've got the Economic Injury Disaster Loan. The Payroll Protection Program is driven by your payroll costs 2.5 times. That's forgivable. The SBA Economic Injury is not forgivable, but it's favorable terms, and it's up to $2 million. So you can apply for the Economic Injury Disaster Loan right now with the SBA. You can go to their website, you can click on it, and it would be available to you, okay? Those are the 2 lending programs. Now, there are some other relief available to business owners that we're going to go into right now. The first one is an employee retention credit. This is really complicated, and in reading through this, I wonder how many of my clients are actually going to utilize it, because it's just, it just doesn't flow very well. Eligible employers for this are operations are suspended by the government, and there's been a significant decline in gross receipts. If you do this, but you retain employees, you're eligible for a 50% credit on qualified wages of $10,000 per person. So you can get a $5,000 payroll credit if you retain employees in these times. However, you can't do this program and the forgivable loan program. And everything I've read, my instincts tell me that the forgivable loan program is cash now and not credits on a payroll tax return, and let's take the cash. That's my preference, my instinct on this, but that is available if you need, and if you want an employee retention credit, you can talk to our office about it, or you talk to your own advisors about it, and they can walk you through it. The final benefit available to small business right now is what's called a deferment of payroll tax. Right now, a business is eligible to defer payment of the employer side payroll taxes. So this is the 6.2% FICA, not Medicare, right? This is just FICA. You can defer payment of that for 2 years. So the first 50% of that would be due 12/31 of 2021. The second payment would be due 12/31 of 2022. So it's the employer side payroll tax only does not need to be paid in to the government during this period. And right now it's up through June 15th. I don't know if it's going to be extended beyond that or not, but you can defer payment of the payroll tax so you can keep money in your pocket with respect to this. There has not been anything that comes out talking about how this interplays with the loan provisions under the payroll protection program. I would imagine if you're not making the payroll tax payment, that would reduce your payroll costs and maybe your forgiveness if you borrowed money for those purposes. But again, we expect more guidance on this, but this is what we know right now. Finally, a couple more caveats. If you have kids or if you yourself still are paying student loans, there is now a suspension of student loan repayments until September of 2020, September 30th. So that goes to the end of the month in September. And final note, look, I know that people are making hard decisions and we're laying off people that have been with us a long time and trusted employees, and it's hard. Unemployment benefits in the phase 3 bill were increased by up to $600 more per week for a 4-month period. And this was designed to try to help make people whole, right? So you're still going to apply with the state office. It's just that the benefit's going to be potentially enhanced. Now I say it's up to $600 because they're still going to look at the person's wages, use their formulas, calculate how much they're entitled to, and then they're going to augment it with this federal money from the federal bill. It's not a paycheck, but it's at least money to try to help keep people's households going. So that's what we know right now, folks. Phase 2, phase 3, it's a lot of moving parts. But essentially, we got to be careful if we have employees that get sick or are told to stay at home because we have potentially paid leave and we have Family Medical Leave Act issues that we have to address. And then we look at liquidity. That's the loan programs, the payroll continuity program, based on payroll, and it's forgivable with no taxable income, or the economic disaster or economic injury disaster loan up to $2 million, 3.75% interest, which you can apply for right now. And then we have the ability to defer payment of the employer side FICA tax for 2 years. 50% is due in a year and a half, and the other 50% would be due a year after that. All right, I'm gonna, that's what I have for presentation materials. I'm happy to answer questions if you want to send them. This program is being recorded, and you can contact Kathy and she can get you a link to the recording once it's processed and ready to go. A question, let's see, loan payments were eligible for deferment. Yeah, certain loan payments are eligible to be forgiven if the money is used to make those loan payments. The code, the text of the law says mortgage interest. I've seen some examples online that are not mortgage interest, so it doesn't relate to real estate. So I don't know where exactly they're going to come down, but I would expect that the guidance would also address that as well. So ears out for that, but that is a possibility. And do we calculate the average payroll from March 1st to March 1st, 2019 to 2020? Again, I don't know if it's going to be March or April, but I would just make sure your accounting records are in place and that you've got your payroll costs broken out for every month going back to, February of last year, just to be safe, so that you're ready with the data as soon as you can be for the 12-month look back calculation. Some employers have got a bigger payroll run. A lot of us are service providers. So we rely heavily on our people. So we might be eligible for more money under this borrowing program, and we just have to do the best we can with it. But, the examples are pretty straightforward, right? This is your payroll cost. You get 2.5 times that in a loan. You spend it in those categories of rent, mortgage interest, payroll costs, and utilities, and it's forgiven, and you don't have taxable income. A couple more questions. Anything on revenue losses? The economic injury disaster loan is designed for the loss of business revenue. So the payroll protection program, you don't need to show that you have a loss of revenue. The economic injury loan is the loan that you should be applying for if you have a significant drop in revenue, but I would still apply for the payroll protection program, right? Just put the payroll protection loan monies in a separate account so you can easily account for it. Somebody asked a question, what is the best option for staff as we reduce staff hours? Are we able to pay full salary wages if hours are reduced? You can continue to pay them on terms that you want to. I know the state of Iowa has a program with workforce development that allows you to reduce hours and reduce pay, and then the state unemployment fund would make up the difference. It's called a voluntary work share program. You might want to look into eligibility for that and how that would work. You just got to kind of figure out what's best for your employees in your group, and how hard it would be to replace them if you lost them, if you need to keep them on payroll, that sort of thing. I understand it's a hard question, and I wish I had more answers, but those are the things that are available to us as tools to keep cash flow coming in and to pay those bills and try to, keep floating until, the current picks up and we can go down the river again, to running good businesses and having fun. Well, it doesn't look like there's any other questions. I hope this has been of benefit to you. Thanks much for everybody attending. If you know anybody that may be interested in the link, contact Kathy, and we can work at getting the video made available to them. And if you guys have any questions, contact me offline and I'm happy to help. Again, thanks for your time, and hopefully this was a benefit to everybody. Have a great day.